Hi, this is Dr. Scott Young, and today we have Jeremy Whaley for our second part of our conversation. Now, again, we're going to talk about economics and a whole load of other fun things. Coming right up. So one thing I want to start off with here is that I know a lot of people were struggling with the last video because it was talking about gold. I think one thing I want to say about it, I pretty darn sure most people misunderstood. He was making analogy in the conversation. Number one, number two, listen, Jeremy and I, or you, if we're sitting in a room, sitting at a sandwich shop or whatever, might disagree. Good, healthy debate is a great thing, but it's when you get all pissy and like, Scott's destroyed the Patriot Network, and Jeremy is like, the son of Satan kind of stuff. In essence, I mean, I say
Did you
that.
get that comment?
No. I'm just putting the hyperbole out there. But
Okay.
we kind of do that, guys. It really kind of, I mean, it gets me to the place where I'm going to have to ban you. And not because you're a bad person, but because that kind of stuff goes down a negative a hole and just is not good for anyone. And realize we're people too, man. That stuff hits us and hurts. Okay, we're big boys, we get it, but you have to also understand you're talking with people with feelings. Okay, so you disagree, that's okay, and I agree and disagree with you on that one point, kind of thing. So
Yeah. Well, specifically, what people were upset about, I think they misunderstood price forecast, or I didn't read all your comments. I'm not really great at going into other people's channels and
more
reading
about
everything.
the price of gold, because
Yeah.
they have hopes about where the price of gold is. And I will tell you, no matter if someone walked in and said 5172.38 for an ounce of gold, they're not right.
Right.
Unless they're the treasury person who's doing it in the New Republic. And I
Yeah.
promise you, part of the conversations are very, very hot in those rooms, related to that.
Well, if I can, let me dispel a little bit. I do know specifically our conversation last week. I was talking about the majority of that conversation. First of all, I prefaced it by saying we have to make assumptions, and the assumption was new U.S. Treasury note. And then you and I agreed to make an assumption. Let's assume the price stays the same, so that we could have the conversation.
Yeah.
So there's a lot of assumptions that are being made, and I think what people are upset about, or they're trying to answer the question, which a lot I think will happen in this second half today. But the question is, what happens to the U.S. dollar in terms of gold? So, for those of you who are listening right now, last week, the majority of that conversation was about a future US Treasury currency, which we think will be called a note. We don't know. And if that's pegged to the value of gold, look, the price doesn't change. So now what that value will be, I don't know. It could be 500, it could be 5,000, it could be 50,000, it could be 50 million. I don't know. What I've
Yeah.
been told is they're going to price it in grams, is what I've understood. So it'll probably just screw with everybody's mind, which is going to be great.
Well, and that's very probable too, because we know the QFS is not just a blockchain, but it's a distributed ledger kind of
Yeah.
thing. So it's way beyond what a crypto is doing. It's way beyond one of those things because it's looking at, you got the US note to a dollar, and then, ounces are not a real efficient way of doing it. It's like the metric system conversations,
It really
which,
is.
which is that way. And so yet, um, like I want to throw a football analogy for some of you guys. And Jeremy's a big football fan too. I mean, I'm a guy that was a football fan from 1977, and I'm going to tell you one thing that hit the NFL was pass interference, and that was in 1978, and that the whole NFL changed. I mean, one tiny little rule made a massive change. And so you can't, even if you introduce something as, as minor really as that, how can you predict what could occur on the front end of that. So you're behind it. How would you know how to predict all that stuff?
Yeah.
And no one did. And that's kind of what Jeremy's saying. Does that make sense, guys?
Yeah, I really was not giving price forecasts last week. Almost, I
No.
think everything we talked about was hypotheticals.
Yeah,
And because anytime you deal with hypotheticals, you have to have controls where you can say, well, let's assume this, let's assume this. We have to make assumptions. Otherwise, the entire argument of logic breaks down.
exactly. So that's the best way to do it. So we did that little short one, and that's the perfect start. But let's jump into the second part of our economic conversation. And so we'll jump them up on the screen. Is the dollar crash real? I think it's gorgeous.
What was gorgeous?
It's a gorgeous question.
Oh, it's a gorgeous
And
question.
I didn't make it up. These are part of where Jeremy has talked to me about. So I'm
Yeah.
not like
Um, well, now I'm afraid I'm going to tick everybody off. I think that first of all, the dollar crash has been happening for the last 50 years.
correct. Yeah,
So if we can go back to the conversation from last week, when you're in an asset-backed economy, or let's just say currency, when you're in an asset-backed currency, the price of gold doesn't change. And I'm sorry if that upsets somebody. That's just the mechanics of it. The fact that you've pegged it to a value means it doesn't change. So in 1971, when Richard Nixon took us off the gold standard, what happened is the dollar started crashing. We have been crashing for 50 years. It
correct.
is expediting to the extent that inflation is out of control. It's expediting to the extent that the buying power of the dollar is getting weaker and weaker. In that regard, yes, the dollar is crashing, and yes, it is very real.
But
Now,
it doesn't mean that it will die. And I think that when
exactly.
people talk about crash, I go, okay, are you talking? I mean, like almost everyone in this room has been in a car crash. Okay. And there's even like a car that you would total out, but that car, if you fix it up, it's sort of drivable. What I think what people when they talk about a crash, they mean like destroyed, and there's like four pieces, four little recognizable pieces on the road in essence. And I just
It's
caution
very
you
extreme.
too
It's like
much.
we're going to drop a nuclear bomb or we're going to
Yeah,
have a controlled destruction.
right. And that,
I am saying that we've been in the middle of a controlled destruction for a long time. But it's like we stay with the stock market last year, or not last year, but 2022. The NASDAQ was down 36%. It technically was a crash, but it didn't happen overnight. People think these things happen overnight.
right.
Very rarely do you have that. And when you do have it, without exception, I mean, think we can go back to pretty much every major crash in history. They rebound within a very short period of time. Just look at the 2020 crash. That was a crash where we were off, I'm going off memory, but I want to say 40% in a week. And 2 months later, it had bounced back. It was one of the greatest buying opportunities ever. So extremes like that are very, very rare, and they don't play out the way that I'll call it the conspiracy sphere like for it to play out. It's
Oh
very
yeah.
controlled, and we have been in the middle of a dollar crash. Now, will we crash to the extent that there's no buying power? You know, I, we could go back and forth on as long as the United States is the de facto world reserve currency. No, we won't, because what happens is when you create an entire globe of fiat currency, everything is moving in fluctuation. If you look at the dollar chart, which I could pull up if you wanted, but I wasn't prepared for it. But the dollar chart shows a relative stability. In fact, the dollar itself has actually gotten stronger in the last several months, a couple years, relative to the other currencies. So the problem with the dollar chart, when you look at the buying power of the dollar, is you're comparing it to other fiat currencies. And for better or worse,
Correct.
that makes it very, very nebulous. People don't really know what's happening. So the truth is the dollar could collapse and the euro collapses. And as long as they collapse together, nobody realizes any the better. That is the miracle of fiat money. And that is the goal of the crazy central banking system.
Right. And I think one thing that we're talking about here is US dollar. We're talking on the fiat, which we will get into in a hair. Okay. And one of the things that we know that the White Hats are planning on doing, and Germany's not even dealing with this here, is that moving from a US dollar to a US note on a one-to-one basis. Okay. And I and so when economists talk about crashes or drops or increases or, buying power points related to that or inflation issues, they're not thinking about this other thing that could be out there, like the US note, which is a gold-backed currency, and we'll get to that one. But again, I could never have understood this Nasara piece with this gold-backed thing, because I would have pushed the button back in 2020, right around Trump's, election loss. But what we're seeing is the values of, even though the stock market shows up right now, the values of companies are fast going off the chart. I mean, they're losing value and reducing staff. And when you see a company that reduces, Walmart's actually quietly reducing 23 stores. There's another company you just read, and I blank it out. It's like 3,500, job losses. Banks are stripping themselves down to the bare. That is them having a massive reduction of abilities, and that's actually comes along with what the white hats are actually doing. Again, it's not what Jeremy's talking about here with that too. So I want to kind of give him some time to talk about this one here. And what's a historical precedent for issuing a new currency and revaluing the funds of a nation?
That's a great question. Okay. So kind of just, I'm going to build a bridge between that last piece and where we're going here. So much of what you just described can best be described in this way. If you look at a country like a Venezuela or a Zimbabwe, who has a just incredibly devalued currency, those currencies have crashed. Yet, if you look at their markets look like they're going up. That's what we're experiencing right now. So, for example, yesterday, or maybe it was the day before yesterday, NVIDIA announced earnings, and they had a huge gap after their earnings. NVIDIA is a major microchip player,
Right.
and they do video
Like
cards.
video cards and stuff like that.
Yeah, a lot of AI and stuff like that. Well, they're now valued at almost a $2 trillion company. They're like one of two or three, right? I mean, it's incredible what their market capitalization is. But then you step back and you say, well, if I were to take this company and I were to just take it as it is back in time to the year 2000, it wouldn't be a $2 trillion valuation.
Sure.
And the reason is because the dollar is worth so much less now. I'd have to go back and look at gold, but if we were to value it in gold, it would be probably a $500 million company. And in the same way, we look at the stock market and we say, well, the stock market right now is, the Dow's at 35,000 or whatever the number is. Is it really worth that? Well, if you go back just to 2008, let's just go back to 2008. Since 2008, the number of what the Federal Reserve calls collateralized assets has more than tripled. So if we were to put it in 2008 terms, the stock market today is not really 35,000. It's more like 10,000 because we've expanded the money supply so much. Right. But we don't feel it. This is what Americans really don't understand. International people understand this so much better because they're constantly having to convert their foreign currency into the US dollar. Americans don't have to do that. We live in the home base of the supposed world reserve currency. And so it can crash right underneath us, which it's doing, and people don't realize it's crashing. Where it shows up suddenly is you don't have the buying power. That's why I was talking to a friend of mine last week or 2 weeks ago. She's actually in Canada, but she was explaining, she was going through all of her receipts from the last 3 years. She's got 2 teenage boys. They spent, I think it was around $28,000 throughout the course of the year on their food budget. Now that's the Canadian dollar, so it's a little bit different, but 28,000, this was 2 years ago. The year before last year, so 2022, that had increased to around 36,000. So it's $3,000 a month on food. And then this past year, it was almost $50,000. Yeah. And she was saying, we didn't increase the change of the food. It's just, that's what the food costs have become. And that was her grocery bills. Okay. So it sounds like a ton of money to everybody, but here's the fact. The fact is you can go to the grocery store right now, walk out spending $150 or $200, and you're like, I didn't buy enough for 2 meals. You
Exactly.
spread that out over 30 days with 2 or 3 kids in the house, athletes, you're buying protein shakes, you're buying these different things. Before you know it, we're spending $3,000 or $4,000 a month in food. That's your buying power disappearing. And in that regard, the US dollar has been crashing, and we're the weakest point I think we've ever been. It's just,
And
how do
every
you
day
value
that
that?
and every day the BRICS, and by the way, BRICS is just Sara, okay?
Yeah.
Every day BRICS knocks off, they flick over a dollar response, and they're doing it like lightning speed.
Yes.
Um, and I just heard something from Iraq that and I'm going to do this wrong here exactly, but I want to say a week to several weeks. Okay, I don't remember the exact date time frame. They knocked off and pulled back. So they didn't want people having the dollar anymore and going into the dinar, and it was like $1 trillion
Yeah.
in just like a week or two. That if they have maybe $60 trillion of monies out there, they've actually pulled 30 trillion or more off the streets. And that actually leans right into that precedent point, which I think we are there, or dang close to
Yeah.
that. We're seeing Iraq actually show off what's going on here.
So in the moment that BRICS becomes the world reserve currency, if that happens, in that moment, people will suddenly realize overnight how devalued the US dollar is.
Right.
And that's why this question that you've posed, what's the historical precedence for a new currency? That's why it's so important, because we have to go there. The world cannot operate with the US bankrupt. It just can't. China would go under if the US consumers just disappeared. It cannot operate that way. You go to your local Walmart or wherever, you look at all the countries that are producing the products that are being sold, those countries will go under if we don't have the consumption here in America. So there's a very delicate thing that's going on in the background. On one hand, let's talk about the evils of central banking. Fiat currency, they're playing this balancing game of, we're going to devalue the US dollar, now we're going to go devalue the euro, now we're going to go devalue the Canadian dollar, and they're constantly devaluing all of them together. And if they play the game just right, they can actually carry that indefinitely. That's the crazy thing. You truly could carry it indefinitely. In and of itself, and I know just mark this time spot, people are going to start hating you right now, but for what I'm going to say, in and of itself, fiat is not the problem. What the problem is, in and of itself, is the corruption of the people behind the scenes.
It's what they're doing to the fiat.
Exactly. What fiat
he's saying.
allows is, it allows for all this corruption. Getting
Right.
back to a gold standard takes that away, because you have
It takes the power. What gold standard does is it takes the power away from people who want to manipulate it. And
yes.
so many people, for instance, another type of fiat, and it's a scarier fiat, is central bank digital currency, CBDCs. And it's funny because only in the last, 2 weeks, Trump has actually said, we're not letting CBDCs coming in, which is another point of he's coming way faster than this election kind of point.
Mm.
How would he do that? It's because that's what they want to do, and that is a great manipulation into a new currency.
Yeah. So kind of with that understanding, and hopefully we've concluded this discussion about the dollar crashing and people get an idea for that. Now the question is, okay, what was the historical precedence for a new currency and the revaluing of the funds? We've seen it many, many times. We've seen it to the negative in the United States in the 1930s when Roosevelt did it. He did a devaluation, but that is a revaluation. It's just revaluing in the wrong direction. So at that time, gold was pegged at $20 an ounce, or I should say backwards. The US dollar was pegged $20 was 1 ounce of gold, and they confiscated the gold. They made it, I don't even know why they did it that way. They could have just revalued it the other way, but they confiscated the gold, and then they said you can buy it back, but it's going to be $35 an ounce. And in doing that, what happened is the buying power of the US dollar went from $20 bought an ounce of gold to it took 35. So it was almost twice as much. That's 50% of your buying power, right? So that is a bad revaluation, but it's a historical precedence that everybody understands. We've had other historical precedents, though. one that a lot of people recognize and cite is the one that happened with Kuwait in the 1990s after the Gulf War.
Right.
This is very publicly documented. It was published in the New York Times. It's very well published. At that time, I'll forget the exact numbers, but it was about $1 equaled, I want to say 20 or 30 Kuwaiti dinar.
Huh.
So you took $1 would get you 20 or 30 Kuwaiti dinars. Well, that means $1,000 would get you 20,000 Kuwaiti dinar, which was, I guess a nice sum of Kuwaiti dinars at the time. Well, literally overnight, they pulled the old Kuwaiti dinars off the market and they issued a new Kuwaiti dinar with a new rate. And that rate was, I think, off the top of my head, around 320. And it took $3.20 US to equal one Kuwaiti dinar. So the buying power went completely the opposite direction. So let's just put that in kind of real terms here. If you put $1,000 US into the old Kuwaiti dinar, you would get 20,000 Kuwaiti dinar. Revalued overnight.
It's like from one end of this, what he's saying to you is 20,000 to 1, right? Isn't that what you said?
Yeah.
To $3.
Not 20,000 to 1, it's 20,000 to 1,000. I think it was 20 to 1.
20,000 to 1,000. Okay, but basically, 10,000. But then it goes to the other side of $3, $3, which actually, when you actually look at it, what's gorgeous of what you're saying is in Kuwait, you started seeing gas prices like 15 cents.
That's exactly right, because the buying power was
and everything else.
And so then, just going with that situation there, had somebody put $1,000 US and got 20,000 Kuwaiti dinar, and the New York Times article articulates this. They woke up and 1-to-1, their 20,000 Kuwaiti dinar of the old value was literally overnight 20,000 Kuwaiti dinar of the new value, which they could sell back and get 320 US. So 20,000 Kuwaiti dinars suddenly became 60,000, almost 70,000 US dollars. So $1,000 US investment turned into 60, 70,000 overnight because of this revaluation. Did I explain that clear?
Yeah, it's a gorgeous thing. And we believe that kind of thing is about ready to happen on a worldwide scale. Okay.
We've been told from several sources, but let me give some other examples that people don't realize, and I really want them to understand. Following the Weimar Republic after World War I, Weimar Republic destroyed. I mean, they just absolutely annihilated their currency. They were printing as fast as they could print to try to buy themselves out of trouble. And there's these stories and pictures of people literally carrying wheelbarrows full of the German currency to buy bread. It was just totally worthless. Well, there was a bank that decided they were going to stabilize the currency, and they did it by buying a bunch of land and issuing a banknote. It wasn't even a government currency. It was a banknote called the Reichsmark, and they set a specific value to it, and they gave people the opportunity to convert into this new Reichsmark, and they gave it at a fair price. I forget what the exact conversion was. Well, fast forward into Hitler's regime, starting off at the beginning of World War II, that Reichsmark was about I think it was a 3-to-1 ratio to the US dollar. So $1 got 3 Reichsmark. In the middle of that, Roosevelt devalued the dollar, and we saw that contract a little bit, and it was more like 1.5 Reichsmark to 1 US dollar because of the Roosevelt revaluation. But then Hitler starts printing, and they got off that land standard. It wasn't a gold standard, it was a land standard. And they got off of that. And by the end of the war, the new Reichsmark was completely decimated yet again. Okay. So they had done the same problem again. They printed too much currency. It is documented. You can find this on Wikipedia. I did a video about this as well, which you may want to link up to. I don't know.
Yeah.
But I showed how in Wikipedia, this is documented. They had a window, I think it was 60 days, 1-to-1, your old German currency into the new Deutschmark. Okay. So it converted straight into the new Deutschmark 1-to-1, but the Deutschmark had a 10x buying power relative to the old one. So what happened is overnight, again, had you bought all those Reichsmark for $1,000 US dollars, it converts into 1,000 Deutschmarks overnight, but you had 10x buying power. When you converted it back to US dollars, you had 10,000 US dollars. That's the historical precedence for that. And there's been so many of these through the years. France has done it. Iraq has actually done it before. We mentioned Kuwait. The US has done it negative. There's been positive and negative revaluations of this in both directions.
And I think one of the things that he's talking about, and I mean, I know a couple of people have brought issues up, like, what was World War II? Well, part of World War II is a bunch of different issues. It's why it's a world war, because you can't like peg it to one little tiny thing. It's very possible. Now, I know for a fact Hitler was bad guy. Okay, I know for a fact. I've studied so deeply on that level. But one of the things that was happening at that same basic time frame is there was a bankruptcy occurring in America. The cabal was bankrupt, was asking them to pay back the note 30 and 33. So that's what Jeremy's talking about, from the 20 to, I mean, I think my numbers were like $33 in the next year, but in a very short time frame, it's 35, and it's stuck at 35 till 71. But what occurs in here is that the central bank guys were real pissed off at the Germans for doing it, and then they flourished for a while. But part of the thing of World War II was to crush them and get them back into a fiat nature, which is part of that. So both sides were ugly in this thing, and that's kind of what he's saying with it too.
A lot of times that people don't realize, again, because we live in America, we live in the universe of US dollars. A lot of international diplomacy and political issues actually have to do with this function of devaluing their currency, because you're getting rid of their buying power. That's why Russia, they pulled the ultimate trump card when they said, we're going to peg our currency at this our rubles will be pegged at whatever the rate is to an ounce of gold, or to whatever grams of gold. And what they did is they stopped all inflation. They just became the most stable currency in the world overnight.
Exactly. And they're making money off of their currency.
Yep.
That goes back in the government, whereas all the central banks are losing money. And that is actually a good thing for us, because it's about ready to come. But let's move into our next thing, because we can kind of keep it going here with that. So what are the potential benefits? And you're the first person that ever said that to me. And I was like, what? There's a benefit to fiat currency?
Yeah, I really upset people with this statement. One of the things I learned in economics, one of the first lessons I learned from Henry Hazlitt in his great book, it's called Economics in One Lesson. Everybody should reference it. But he opens up with the story of Bastiat and the broken window, and he explains how every action has a reaction. And it's often, in libertarian terms, there's a lady named Emily Schley's who wrote a book called The Forgotten Man. It's the law of unintended consequences. That's what they're all talking about here. And that is, when you make one move this way, there's an unintended consequence that happens over here. And with fiat is not this crazy idea that evil people came up with to get us off a gold standard and steal all our money. That's not what it was. It's because there are limitations to gold. There's limitations to asset-backed currency. Fiat is the counter move to that. And the benefits of fiat is you have this elasticity. Everybody who's listening to this right now, the odds are you all own a house, or you have purchased a house, or you've done something on credit. What is the benefit of credit? You can go get free money, and you can go buy something right now that you don't have the money for.
Right.
That is a function of fiat. When we get to a gold economy, everything in the credit department is going to flip upside down, because there's not the elasticity. So I mentioned earlier, collateralized assets. What is that? That's land. It's assets that people buy as collateral. So they buy the house, they put it up as collateral. Let's say they put down $100,000, but they got a $500,000 loan. That is an asset that is collateralized. You put down 100,000, you just got 500,000 of buying power. Well, where did that $500,000 go? It went into the economy. It paid the contractors. It paid the subcontractors. It bought the materials. Now, all those guys, they're operating on that elastic currency. The contractor spends his money and pays all of his subs, and they buy all the materials. They all go pay their bills. They pay their mortgages. all as if the money that was given to them had value to it. And you're over here with your little $100,000 that you collateralized, and your house is the backing for that. Well, you got $500,000 that's just entered into the economy.
Right.
In doing that, literally everybody listening to this has contributed to the inflation. That's what you guys don't realize. You get so mad at the central banks, you get so mad at politicians, but every one of us, if we're consuming and we're using debt in any capacity, we're contributing to the inflation. That's why, Robert Kiyosaki talked about this in Rich Dad Poor Dad and other books that he put out later, where he talked about, if we've changed systems, we went from a gold system leading up to 1971, we went into a fiat system, the rules change, and the rules of this system are debt. So if you want to win this game, you got to play the debt game. There is no way around it. Right now, if you're going to win the fiat game, you learn to play the debt game, because that's how we expand money supply, and inflation is a natural byproduct of that. Benefit.
And so, what you're saying there too, and let me give you a direct benefit. Business owners like me, I've used debt to build my practice farther, and then and one of the things that you will do with a debt on there is you're looking at how long does it take for that debt to be paid off, based upon what that growth could be. Now, if you're on a negative number, which means it has to go longer, well, then that kind of screws you. But if you can do it in a short enough time frame, then you have paid it off. There was a debt thing that I got into, and for a growth point, okay, and the predictor point was you should be able to turn that in 18 months. Well, I turned that sucker in 9 months. So basically, I'm ahead. But I used fiat debt to jump into my practice with that too.
Yeah, absolutely. Debt is speed. If you want to grow fast, if you want to be able to outrun the inflation in this economy and be able to participate in a fiat system, you need to learn how to use debt. People, all due respect to Dave Ramsey and helping people get out of debt, credit card consumer debt is not good. But when you think about how your business operates and the ability to grow and compete, you have to have debt in this system, and you have to understand it. And that is the benefit of fiat. The benefit of fiat is you, Dr. Scott, are able to go get a line of credit and go acquire an asset and put it to work and start making money with it faster, because you had debt, because you were able to expand the money supply. If we're in this really tight money supply and we don't have any elasticity to it, then everybody suffers on the consumerism side. That is the benefit of fiat currency.
And I think, the reality is there's a way to kind of be in the middle of some of this stuff too. But I promise you one thing, the rules of this monopoly game will change. Okay. And that's what he's saying. So I'm throwing out this next point here, and we're flipping that little script point. What are the drawdowns or negative kind of points of an asset-backed currency?
Well, first of all, this move in 1971 is not the first time that we've gone to fiat. People don't realize that. We've had multiple conversions of this. Yes, it's in the Constitution. We should have gold and silver. The Federal Reserve is not the first central bank in the United States.
Correct.
We've had multiple central banks in 18, whatever year it was that Andrew Jackson took over. He put us back on a gold standard. We were on fiat
1832.
leading up to Andrew Jackson. We went off of a gold standard and went to fiat for a time period, either during or right after the Civil War. And then we got back to a gold standard. And then we went off of it in 1971. Why? Because there's a drawdown to gold. There's a drawdown to asset backed. And what that is a limited supply. The benefit of gold is also the law of unintended consequences. Now we don't have as much of it. We don't have as much supply. And so the buying power goes up, but what happens is the accessibility goes down. And that's the thing that I'm the most curious about, is in this idea that you and I are both running down, where we believe that we're going to an asset-backed currency. How in 2024 are we going to get all the consumers to realize that their function of consumerism, the mechanism that you use, it's got to change, because the mechanism for expanding money supply and buying power is going to have to change. So is there going to be a built-in inflation? that expands that money supply? Is there going to be, I don't know. I have no idea who's come up with a solution to this.
Well, I believe that one of the things that I've been looking at, and I call them the anti-cabal, but most people will call them white hats. Okay, I guarantee you, this is why it's taken so dang long for this thing to flip. We're all waiting for Nasara yesterday, and everyone's getting all pissed off. But you don't understand. There's 18,000 people at the table screaming at one another, and you're trying to get them go, we got to be on the same table and the same timeline to move this thing forward. And so it is a big deal. Even though we have the BRICS Jassara people over here, they're not fully on all their Jassara points. And so what he's talking about, and I already have one. We're going to do a video here, and it's going to be fiat to gold and what happens to credit. Now, I actually have some ideas on that, but I think you're going to love what Jeremy and I talk about when that comes up. So I'm just throwing.
Oh, are we going to have that conversation?
Oh yeah, we're going to do it later. But it's a gorgeous one. I think it would be so good for you guys to see, because I actually been talking to my father-in-law, for the last few years. He's in hospice right now. So you can pray for our family. We're going through some of that stuff with that. He's in hospice today. He's probably not going to be here in this earth for very long. But the point that happens, he actually has given me several points that has happened in banking when they were utilizing the non-fiat system. How they did credit. And there's some real cool ideas with that too. So let's flip that thing to, why does an asset-backed currency stop inflation?
Yeah. Okay.
Or
So
deflation, either one,
Yeah, the function of, did you say or deflation?
Yeah, or deflation. In essence, I mean, inflation first, but deflation is a cycling point with that too. So
yeah, so inflation is a function of money supply expanding. Deflation is a function of money supply contracting. And so we saw this a lot, let's say in 2008, when we went through all those foreclosures. All those foreclosures contracted a ton of money supply.
right.
I would have to go back and look at the numbers, but I remember it being like 40 to 50% of the credit money supply got contracted through that period. Well, there's something else miraculous that happened. Do you remember going into 2008 before the financial crash? Do you remember what happened to the price of oil? It shot through the roof. I mean, I was paying $5 a gallon for the first time in my life. And during the financial crisis, when everybody was freaking out, oil dropped to one of the lowest prices that we'd had. Why? We had a massive deflation. If you look at the value, the demand for the US dollar on the dollar chart, this is in fiat currency too. The dollar skyrocketed against international currencies. The Federal Reserve's mechanism to stop that kind of deflation was quantitative easing, which was the pumping in of currency. So you can go and you can look at the QEs, the quantitative easing. You can look on the chart. You can see the day that they started the QE. You can say the day it expired. Then they started round 2. It expired. You can see when they started round 3. And that was what we called it QE infinity, because it stabilized, because what they were doing is they were injecting trillions of dollars to offset all this massive contraction of money supply. So that's the expansion and contraction of money supply. Now, why does an asset back stop the inflation? Because you can't keep printing money. So it literally overnight stops it. If you look at the value of gold, let's just keep pricing things in gold as the base currency here. Whenever you're inflating, gold has to go up. I mean, there's some manipulation there. There's some free market principles at work. But in general, gold has to go up whenever you're inflating the currency. And we've seen that consistently. When you're in a deflationary period, gold goes down because the buying power of the dollar is going back up. Okay. When we peg dollars or whatever currency to gold, everything stops. All inflation stops because the money supply is not expanding. So as an example of this, look at Russia. Tucker Carlson just did a video a couple weeks ago, and he went into the McDonald's and he's like, look, I could buy for the equivalent of $7 like 2 Big Macs and whatever he purchased. And I remember there was chocolate cake involved, but all this for $7. I can't go down the street and buy a burger and fries and a drink for less than $7 right now.
Oh God,
But
it's like horrible. I
it's
mean,
terrible. But what we saw in that video is the effect of a gold-backed currency. It stops all inflation. It appears that there's a deflation happening. Um, but what's really happening
yeah.
is you're getting a revaluing of all these I don't want to say assets. It's
It's
just
not a real deflation. I mean, major deflations have occurred. What Jeremy's talking about, one of the more major deflations actually occurred in the late 70s to early 80s when Reagan came in,
yeah,
and he's pushing his Reaganomics. Volcker is pushing back in the Fed, and we saw a deflation of currency, and and massive increase in interest rates. So they were, we're talking about that kind of thing. And then it started to stabilize more in the later time frame of
right.
his first or second, uh, term that he was in with that too. With that, so let's talk. And I know we're just kind of keeping the time frame in good here because I really think. I mean, we could spend about a year on that one, but let's
Well, what
move.
people don't know is when you and I talk on the phone, we'll just talk for 2 hours.
Oh God, we lose time. And I have, I mean, like when I do this on eschatology, end time stuff, and Dr. Jeff Swanson, my wives, our wives just have to leave us, because we will hit scripture in ways that other people don't do it. So yeah.
Yeah.
Okay, so people are struggling. So related to this point, people are struggling with inflation and pricing. What can we do to make our lives better? Obviously, there's going to be a point in time where it's going to flip, and that's going to happen. But help us with our mentality here.
Yeah. Okay. Great question. So here's what I say. You have to deal with the cards that you got. You can sit here and be upset. We can be angry at the government, which I love to hate on the government. We can be angry at politicians. We can be angry at the Federal Reserve. Or you can turn around and say, what do I do with this? Let me use a very basic metaphor here. When you're in summer, what do we like to do? I love to go fishing, play baseball, do water sports, all the stuff that we love in the summer. Well, when winter comes, we could get really angry that winter's here, or we shift our strategies and we say, okay, I'm going to go snow ski and I'm going to go do snow sports and we'll play hockey and we'll do stuff that's winter related. And, we understand the seasons in that regard, but we often forget that we can apply seasons to everything because life is seasons. And so, we're in a season right now. It's not a perpetual eternity. We are in a season of fiat currency. We are in a season of a lot of government corruption. We are in a season. What do you do with the season? Well, as the old saying goes, when life gives you lemons, you make lemonade. So I say that the way that a person should approach it, number one, actually don't be afraid of debt. I'm not saying you'll get into ridiculous amounts of
Oh,
debt that you can't cover,
yeah.
but if you need to get into something, don't live so tight that inflation is killing you. Because if you don't leverage debt to buy your house, if you don't leverage debt to get into some things, if you're in a business, if you don't leverage that, inflation will put you out of business. That is the ultimate tax. I mean, bigger than any income tax is the inflation tax. And very few people see it or recognize it. So that's one thing. That's not an economic plan right there. It's just a comment.
Well, I mean, you're talking about leverage the debt, but also know what your real budget is
I'm
too.
saying
That's what
don't be afraid of it. Like people are so afraid of it. One of the worst things is to try to use, like Robert Kiyosaki said, if you're going to play this game, you can't use the rules of the old game. So if you're trying the rules of bury your money under your mattress, if you're trying the rules that would apply to a gold standard, if you're trying that in the fiat system, you will lose. If you try the rules of just park your money in the bank and leave it and let a little bit of interest accrue, you will lose. You will lose your buying power over time. There's nothing you can do about that. So, well, I say there's nothing you can do about it. There's nothing you can do about it with those rules. So, what you can do about it is you learn the rules of the new game. And so we have to think in a different way. Now, my book that I'm about to be complete with is called Building Your Financial Fortress. And I talk about multiple sources of income. And I put the emphasis on cash flow. Now, it doesn't matter if you're in a fiat system or a gold system. Cash flow is king. You know this, every business. One of the things that I say is a person can live an entire lifetime without a net worth, but they can't live even 2 or 3 weeks without cash flow because cash flow is the engine of wealth. If you don't have cash flowing through, you can't do anything. You can actually have a business that's never profitable, but as long as there's cash flowing through, you can operate that thing indefinitely. Okay.
Right.
Your personal
Actually,
life is that way.
it's one of the best ways to do it. I don't like profits in a fiat IRS based point. I hate profits. But it doesn't mean that I don't I'm not building up the cash in the business.
Right.
So and there have been times where I've been like to the bone on cash flow. And I'll tell you what, when you have so much debt and then you have no cash flow, and that's where most Americans are fighting with, because they've never really been in a positive ratio to that.
Right. But taking on debt for the new flat screen TV, that's never going to pay for itself.
Yeah,
There's a concept that we call self-liquidating debt. So if you buy, let's say, a new automobile to do deliveries for your hearing aids, and that allows you to expand, and you hire a new employee who creates a delivery service for hearing aids, well, that
that's
becomes
good.
self-liquidating because it grew your business,
Right.
and the growth in business pays off the vehicle. If you bought a new flat screen TV just so you can watch the Super Bowl, and you did that on a credit card, it's never going to self liquidate. That just hurts your future.
Right. So, like, I'll put it in a personal level. Like, you have a computer. It's okay. It does some of the things you're going to do, but you do have a kind of growing business somewhere in your life. Okay, eBay business or whatever that might be. Maybe you have to get a better computer system and a better, software management system. So you use some debt to pay toward that kind of thing, so that you can leverage that business even farther. And some of that ways. That's what he's talking about with it.
Yeah, exactly. And so, what can people do right now? Number one, learn to play in this game. You're playing a different game. Quit trying to put different rules in this game.
Right.
Number two thing that people can do, diversify your income. And I put as much emphasis on passive income as possible. What's not useful is to have 12 jobs. You can't do Uber and eBay and your career and babysit on the weekends and deliver pizza. And, you can't do all of that because it's all active income and you have to do it. So it's really important to find ways that you can generate and create passive income. If people aren't familiar with that term, basically what it means is you put work in on the front end. You may not get paid initially, but you put work in on the front end, but then it can pay you multiple times over time. So your books, for example, create passive income for you. Royalties will create passive income, but we can do that with real estate. We can do that with rental properties. You can do it with certain types of paper assets that we can invest in, but businesses are generally the place where people want to put that emphasis. And it doesn't have to be a big business. People can get into a very small business and create passive income and create systems and really grow an incredible net worth. Unfortunately, schools haven't taught people to do that. So what we have is, again, the old rules. People have been taught, you go to school, you get a career, you get an education, you get a career. That is your job. That's the money you have to work with. Now you got to go work with that. And the truth is, none of those boundaries apply. So that's the thing. Like, what can we do? We rethink the boundaries. We rethink the rules.
Right.
And when you rethink the rules, infinite possibilities open up. And that's where it becomes very exciting.
And he just basically said Rich Dad Poor Dad by Kiyosaki. He literally gave you the bare bones of that kind of thing with that.
Yeah, I did.
It's so, and it's a great book. I have the audiobook of it. I have the book series. I've gone through that a lot of ways. And this is not trying to beat up the Dave Ramsey kind of thing. Dave Ramsey is really awesome for the people who have had bad spending habits and they need to like pull themselves back into a bubble underneath a budget point. Hey, man, that's some good stuff.
Well, as I like to say, oh, sorry, I cut you off.
No, just what Kiyosaki's doing is saying, okay, but when you're within your circumstances, he doesn't buy something he can't afford. Okay, what he's doing is he has a massive amount of debt. He'll talk to you. Recent stuff. This guy's very awakened now. He has a massive amount of debt, but he's got tons of assets.
He's a big gold bug too.
Yeah, huge.
So, with all due respect to Dave, he lives not far from me here in Nashville. But I often say, do what Dave does, not necessarily what Dave teaches. Now, I'm not saying that Dave is all going and getting in debt, but if you look at Dave's balance sheet, Dave builds multiple businesses, multiple real estate deals, and they just built a huge office. I mean, an enormous office off Interstate 65 south of Nashville. And I look at that and I'm like, good golly. I mean, that had to been, I don't know, it had to been 300 million. It's a huge office. And what is he doing? He's bringing in constant income, constant passive income through all these various investments that he's put out there.
And guarantee he's got, if we looked at his balance sheet, I guarantee you he's got debt on there.
Well, yeah. I'm not going to say anything publicly that I've been told.
Well, Scott's going to say it because I've looked at a ton of balance sheets, not as many as my financial people. That's why I kind of in here, even though I'm the weird audiologist with this, and people go, well, why is some doctor talking about this? Because I've invested so much in this financial realm that I know my books and I know what books mean and how they work. But smart businesses do have that. They will have a debt on their balance sheet. It's okay.
To that point, Scott, I want to validate you a little bit, and myself too. My background was in music, but people say, well, you had a music degree. How can you have this background in finance? Well, I had to figure it out. You had to figure out the business stuff. What happens when you go and you get that degree, and I'm not talking about the piece of paper as much as I am the formal education piece of it. What happens is you get subjected to, this is the way to think. And when you are told how to think, you don't learn to think. What I had to learn to do, and what you've had to learn to do, is we've had to learn it by learning to think through, which means we solve the problems from a different perspective. And that's why you and I've had this conversation. Some of the greatest financial problems of the future will not be solved by financial gurus. They'll be solved by people that are outside the box. You can't see the problem from outside if you're inside. And
he's talking about matrix thinking, in essence.
Yeah, exactly. So, and in the same way, I mean, it happened to me as a musician. You go to school, you get your formal music education. Well, now you don't have the freedom of thought that a lot of people that didn't go to school have. Here in Nashville, we play in the studio through a number system, literally just write out the number of the chord, and you have total freedom of thought. Well, for those of us who went through a more classical background, that becomes really, really hard. Right. Because you weren't taught to think so freely. We were taught there was boundaries, and the same is true for every discipline.
Right. I mean, it's like, I would say it from a Scott standpoint. I started learning to retune my guitar, and that's like so outside. You would retune the guitar, and then you use some of the same chording structures, and you have blown up everything that you thought about before.
Right.
And that's kind of the point that happens in here. And I think that's where we're going to see, because again, those people, a lot of these financial gurus, smart people, no question, but they're so focused on fiat, inflation, debt, structures, Fed, looking for the Fed to do everything for me. Oh, come on, Fed, baby, you're going to work it. And the answer is all of those systems are dying. And that's kind of what we're kind of showing here, which leads us into this next kind of point. So apply that to someone who's got 500K of assets. So this is a relatively well-off person. And don't think this is a high of a well-off person. You only know this by doing something called a financial statement. And Jeremy, I've done it. First time I did it, I was like, oh my God. What you're putting down there is you're putting down all your sources of income. You have to also say if you had an alimony or whatever and child support, then you have to list off every single point of your accounts. And then you have to say, well, okay, now I have a car, how upside down or, right side up to that car, and all those things come in. And then you have a final point that says X number. And so in essence, it's a personal profit and loss balance sheet in essence.
Well, yeah, it's a net worth is what you've described. And so a net worth is exactly what Scott's just described. It's everything that you have. And then, you take out what you owe, and what's left is your net worth. But as I mentioned a minute ago, a person can live indefinitely with zero net worth.
Right.
And they can do great as long as they have cash flow. In the same way, a person can have a huge net worth, 20, 30, 40 million dollars without cash flow. They can go bankrupt.
They're bankrupt. And by the way, that's happening right as we speak.
Yes.
We're seeing businesses that are, they're like $140 million business, but they took out a
Yes.
$50 million short term, and
Yes.
that short term's coming back with interest rates. And they're going, oh, that puts me upside down. And they didn't have enough cash flow to handle it. They
Yeah.
were utilizing this really ugly system of hoping that the interest rate would be make up a number like, my house is at 2.75. Well, my son is thinking about houses, and the only loan he can maybe get is 6.9. I mean, that's a massive difference on a
Yep.
monthly basis. And that's what these businesses are dealing with. And so it's not even about the asset point. So
So
sorry.
let me talk to somebody who the average middle class aging American, we'll call them 55, 60 years and older, that has a 401k, they generally have somewhere between 300 and 500,000 to work with. Okay, so let me address that group of people. If you have that kind of cash to work with and you say, I need to invest this and I need to figure out how I retire, just write this down. I don't have a net worth problem. I have a cash flow problem. Understand that you have a cash flow problem. If you understand that first, now we can solve the cash flow problem. Okay, so how do we take 300 to $500,000 and build enough cash flow that we never go broke? And the answer is we have to buy cash flowing assets. Okay, so with $500,000, you can buy a rental property or two or three or four. And with today's rent rates, at least in my market, there's a good chance, you'd be using some leverage to get into it, but there's a good chance that your rental income will offset your cash flow needs on a month-to-month basis, especially if you have some Social Security coming in and some other cash flow coming in. Let's say the gap is $2,500. Well, with one or two rental properties, you can spread that gap of $2,500 in a rental income. Okay,
Yeah.
it's not really that far. Now, if you leverage it to the max, if you're sitting at a 90% loan, you might only have $100 out of that. But if you can sit at a 40 or 50% loan, you can get decent rental income from it. You can spread that out. Another place you could do that would be like with an Airbnb or other vacation rental properties, or there's all sorts of rental opportunities. And for somebody who has that kind of cash to work with, I would not say, well, I would say that, but I would say look at how you can get any cash flowing assets onto your books. Start getting cash coming in. What most people plan for is they plan to stop working, stop saving. I have to have $1 million or $2 million net worth so I can spend against it, and hopefully I outlive it. No, forget that. You don't have a net worth problem. You have a cash flow problem. You need enough cash coming in every month to cover your expenses and then a little bit extra. And as long as you have that, you can theoretically live indefinitely. So someone with $500,000, I would focus on buying some cash flowing assets. That could look like rentals. It could look like Airbnb vacation properties. Could look like a franchise. You might partner up with somebody who has a good business background and wants to run a franchise, and you might have just the right amount of capital that they need, and you're the financial backing behind it. There's a million opportunities.
You're talking about, like some of these franchises, 50, 60, $100,000 are not a huge number. And you can actually, say we'll be 50-50 partners in essence. That person puts all the sweat equity in it. You're walking away with an X amount at the end of the month kind of thing, but you're also helping with them with the financial part of that.
Right. Now, people, because I do so much with trading with my Trade Maestro business, people always want to know, well, how do I trade the 500,000? Here's what I say. You don't trade all of it. You take a portion of it. My philosophy on trading is very different than most people. I'm not sitting here saying you dump 500 grand into stocks and you walk away and you hope for the best. I've never, ever said that. I never will say that. My philosophy, I don't teach day trading necessarily, although people can do that. But I teach short-term swing trading. We trade the trends. We trade trades like the NVIDIA trade this week. And when they're moving, you get the profit and you close the trade and you turn that into cash flow. Okay, so we bring that in. Or if somebody does
gambling, it's like you won a whole bunch in the slot machine, and then you keep throwing it back into the slot machine in that way.
Yes, but it's much more systematic than gambling.
Exactly.
But there are other techniques. If somebody does want to have 100,000 or 200,000 in stocks, there are other techniques that they can use to bring in monthly cash flow, and that's a great tool as well. The outcome here, no matter what, is create as much cash flow as you can, because the more cash flow you have, the more freedom you have to reallocate that into building more.
And so on the converse level, when we have someone who has a very small amount of assets, in that way, 10,000, what can he do in that kind of realm?
Great question. So on the flip side, first of all, realize that you are not more disadvantaged than the next person.
Correct.
Mentally, what most people think is, oh, I'm so far behind, I can never dig out. That is not true. I have seen people completely flip the script in 3 to 5 years. And when I say completely, I mean go from less than 10,000 assets, maybe 1,000 of money to work with, or maybe zero. Literally, I've seen people go from zero, and in 3 or 4 years, they've got 15, 20, $30,000 a month passive cash flow coming in, and they got a net worth well over $1 million. You can do it remarkably quick when you build it the right way. So to
Correct.
somebody who's got a small number, the first thing to recognize is, what do you have? It's not a lack of resources. Capital is resource, right? It's not a lack of resources. It's a lack of resourcefulness. So start with,
Right.
what do we have? What do we have is we've all got the same amount of core asset called time. I have it. You have it. Warren Buffett has it. What's the difference in Warren Buffett's use of his time and how he deployed that asset, and how you've deployed it, or I've deployed it, or somebody else has deployed it? Well, Warren Buffett, he deployed his asset in a way that he exchanged it for more capital resource, which he then took that resource and he parlayed that into more capital resource. But if you look at Warren Buffett's balance sheet, he's full of income. Warren Buffett did not become whatever rank of billionaire, third or fourth now. I forget where he's on the list right now, but he didn't become that by saving. He became that by buying more cash flowing assets. So no matter where you're starting, realize every hour that I spend is an expense of asset. Am I putting that into an expenditure that's going to bring me more capital, or is an expenditure that's going to give me less capital? So translated, when you sit on YouTube, and we've all done it, we sit on YouTube or Rumble or whatever, and we consume all the craziness that's happening in the world. How many hours? 2, 3, 4. I mean, people watch this for an hour. I hope it's been worth their hour. But people will consume hours and hours of fear. That
Right.
is time that you could be putting into capital appreciation. That is time that we could be investing in another place that we could actually make money from it. Now, people are saying, well, I don't know where to do that. Well, you got to start by realizing that you're spending your number one asset, which is time.
Right. So
People,
in essence, he's talking sweat equity. It means that you've got to use your fingers and your brain involved in that.
we got to be smart about it. Your time is the most valuable asset you have. So on the front end, you may be exchanging more time for capital, but when you do it right on the back end, you're exchanging more capital for time. So let's go back to the franchise model. The beautiful thing about a franchise is you buy a business system and then you exchange capital for the people to run it, and you've got money flowing through because you bought a system, a business system. That's what everybody wants. That's where passive cash flow comes from. On the front end, if you don't have the capital to do that, you have to build it. And there's a bunch of ways you can do that. But what you don't do is, you don't want to go build a business that's 100% reliable on you. There has to be an exit plan. People
Right.
have this idea, I'm going to start a business and now I become the pressure washer. I become the, whatever the business is that they start. And they say, well, I got my small business, I got my LLC, but you didn't really get in business. You're owning the job that you're doing.
Correct.
And now you have nowhere to go. Where you create a business system is, maybe you do create a pressure washing business and you're cleaning people's drives and decks and everything, but you hire 2 or 3 college people to come in and help you. And now you're buying time back. But in the beginning, you may be doing all the work. You have to
Sure.
get a little bit of momentum. Okay.
Sure.
That's a very entry level business idea. The best place to do it right now is on the internet. I mean, the
Oh
internet,
yeah.
building personal brands. You know what's amazing, Scott? I love this. I love this community of red pill patriots and truthers, because they consume so many people who literally did what I'm explaining. They
Every day
consume
they're doing it.
content from people who overnight lost their careers in 2020, went on the internet, started putting content out there, started providing value, started building a brand, started being able to make some advertising revenue, maybe some endorsement deals, maybe affiliate deals. They're able to make some revenue. They created a business for themselves, and people on the other side judging them saying, you shouldn't be monetizing that. Well, you could do it too if you had anything to say. The internet has leveled the field. It has never been so easy to start an online business. It doesn't have to be content. It could be anything. There's about 14 different business models, and you can apply all of them to the internet.
And I think and I'm gonna give you 2 points that come out. Now, first off, Gus told me not to advertise, but it doesn't mean I'm not making some other monies in other ways. But also, God's got a longer term plan in what I'm trying to do that other people are doing. Okay. Number two, there is nothing wrong with any truther out there who is advertising, as long as she's advertising in a good way, and has put her own sweat equity to say that's the kind of company that I want to do, and then backs it by time equity too. There are lots of people are doing that, and they're spending a bunch of time on the back end of that company who's creating value inside of what she's saying, and then she's also spending time. And I know I'm thinking of a person right now that does this kind of thing. Michelle Moore does this, and she'll spend back into that business and making sure that what she's doing every day still creates the value, and people are loving what happens. Let me give you a second one, and I'm going to use a friend of mine named Darren. He actually there's a guy named Zellner in our community in Tulsa, and Zellner actually puts all the equity for Zellner extermination. Darren's the guy. So what there are is a 50-50 ownership, I think, but I don't know the exact number. It doesn't really matter. But the point is, Darren's doing the less assets. I remember when he had nothing, and he had his basic truck, and he's exterminating, in different places. But he's so good at it with that. And then he expanded the people. Well, it was great for the guy with a high net worth because he's not spending any time on it. So he's utilizing something that generates. On the other side, Darren had to put a ton of sweat equity in there and built it to a place that now it's built in, and it's not named Darren, in essence. I mean, and I've done that with my own hearing practice. And I do that. Now, obviously mine's Dr. Scott Young, but that is a different reason for why that happens. Is that kind of a reasonable way of saying it?
That's it. I mean, those are perfect examples. And what I want to really clarify for your audience, because inevitably what people will say is they'll say, oh, well, I don't want to be on camera. I don't have content to say. To do what I'm talking about, do not have to be a content creator. You could be a course creator, and you could sell your training for something that you're an expert in. You can get into a business of reselling different trinkets. We'll just call them trinkets through various internet outlets. The thing that the internet has done is it has been a great equalizer. Never before has Mary Jo in middle of nowhere, Nebraska, had the opportunity to compete on a global scale the same way that the biggest executives in the high rises in New York can compete. We literally have an equal playing field. It's okay. Forget fiat. Forget how bad the government is. We live in the most extraordinary time of opportunity in world history. And most people are sitting here saying, if I could only go back to the 1950s when I was on a gold standard. Well, you would be freaking miserable if you did that. So let's live in the moment, look at the opportunities. And if people, I see you put my website up there, jeremywhaley.com. Please go sign up for something. I only have one lead capture on there. It's for my 7 Extraordinary Secrets, which is a little bit old, but it's good. But reach out. Feel free to send me an email. I've got other trainings, and I'd be happy to help people. This is what I'm super passionate about. You can start a business usually for less than $500 on the internet. You can get up and running and start creating money. If you don't have a product, if you don't have a structure, there are others that we can plug you into. There's always a solution. It may look like trading. It may look like real estate. odds are there's going to be a business mixed in there somewhere. It's probably going to have your name attached to it to some degree, building a personal brand. There's now automation tools, a tool that I'm using really heavy. Scott, I haven't even shared this with you. I have a new AI for building your personal brand. It creates the content for you. There is no excuse anymore. Nobody has an excuse. So everybody is sitting at home saying, I only have $1,000 and I can't survive. Well, great. You also have an equal opportunity. How do you use your 24 hours in a day? How do you build from it?
And
Everybody's just got a different
I
piece
think a
of puzzle.
lot of people are struggling with this one point because sometimes they're saying to me, like, I'm looking for, when Nasara hits, I'm looking for the rules of the game to change, so then they're talking about things like UBI. So I need to get something, on a daily basis to sustain me, or they're saying, I need this to happen before I can do that, and the answer is it doesn't matter if we're 2 years into a gold-backed currency where the rules have changed, or 2 years before the gold currency occurs. That in essence, the sweat equity point and the cash flow point that happens in assets that Jeremy's talking about is incredibly powerful. So by the way, I love your comments. I want your comments in there, but sometimes you'll ask me like, well, what do I do about that? And you're asking on the YouTube comments, and I get it. I'm putting Jeremy Whaley on that screen. He can't go to that website. It will help you kind of get some fresh perspective. And it's fascinating. I talk to a lot of truthers, and you look at them and you might have, looking up to them, but I promise you, every single truther, including Jeremy, had to do it with the sweat of their brow.
Can I say something to piggyback on what you just said? One of my mentors is a guy named Keith Cunningham. You mentioned Robert Kiyosaki. Keith Cunningham is actually Robert Kiyosaki's mentor. He was the original Rich Dad. And I worked with Keith for 4 years. And
is that who he talks about all the time? The rich dad thing?
Yeah.
Okay. Yeah.
Yeah. So I got to know Keith pretty well. And one of the things that he used to always challenge us with is he would say, if you were to walk into a bar and meet the man you could have been, what would you learn?
Right.
And in regards to this community, and we're waiting for Nasara, we're waiting for the rules to change back, we're waiting for this and that. One day, for a while, I got caught up in it too. And you and I have talked about it. And one day I had this moment where I flashed back and I was like, if Keith was here, what would he say? He would say, what if you walked into a bar and met the man you could have been? What would he say? And the man I could have been said, you have two choices of your tombstone. One can read, he made every moment count. He took advantage of every opportunity in the moment. And the other reads, he died waiting. And I don't want my tombstone to say I died waiting.
Yeah.
So I choose to live right now in this moment. We're building what we can build now. If the rules change, they change. We adjust when they change. If the system changes, we adjust then. But right now, the principles I laid out, they're going to apply no matter if you're in a gold standard or not. And people have got to get off of their little tushes and say, forget poverty. I'm not going to live here anymore. I'm not going to live here waiting. I don't want my tombstone to say he died waiting. I want it to say he died in action.
And I mean, I use my own personal example, but in 2008, 2009, I was 90% debt to income ratio. I couldn't cover a return of one set of hearing aids. I literally, if I had two of them in a day, I was bankrupt. That's how close I was. I was using my second mortgage to pay my first mortgage. That is some ugly math. Okay. And pay myself nothing and working 100-hour weeks. But catch what I did. I was working 100-hour weeks to build the business. I was working on the business, not just in the business. Yeah. And then it began to turn to allow me to do some of the stuff that I'm doing now. And yet that's where Jeremy is coming from. And that's where he's trying to share with you. So jeremywhaley.com. I think that's a really powerful way of it. In essence, it's a mind reset. That's he's going to give you, and I think that's something to look forward to with that.
Can I tease? I would love to end on that, but can I tease the thing that we talked about? The economic course?
Yeah. Oh, yeah. That's right. We were talking about that. I was like, "Whoa, what?" Yeah.
Yeah.
Please. Yeah. We forgot all about that. Yeah.
So
Go ahead.
coming out of last week's video, we were discussing, and what I want to do is I want to put together, I think it's going to be about 2 to 2.5 hours of training. And I'm going to build off this principle of the law of unintended consequences and show you guys how economically all these things work. But we'll break them down in like 5-minute videos, 5 to 10 minutes. So it's really easy to digest. And Scott's going to push them out on his channel. And what I really want to do is please feel free, give us your feedback. Be nice, but give us feedback on these videos and tell us what you're struggling with so we can try to address them. Because the truth is everybody's just on this journey trying to get to the other side of it, and you may not agree with everything I say, but my logic is not flawed, and I'm not sitting here trying to deflate people or make you feel bad about an investment you've done. We're just trying to help put more information out there so people can be better educated and they can understand better what's going on. So there's my little teaser. We're going to do I don't even have a name for it yet, but we're going to do it.
Yeah, and I'm gonna put it out on this channel. And it's gonna be a value add point. I'll have it in a playlist. We'll decide on how the name of the
Yeah.
playlist a little bit later on, but we'll share that with you, and then and really it's gonna kind of direct back to him. So again, this is kind of a bilateral good. It's good for Scott, good for Jeremy, but that's also things that you will find too in your own life.
Well, this is the new economy, and I hate to keep dragging this out, but the new economy is an economy of contribution. In the old, I have a whole presentation I do on this about the old corporate globalism and how we're moving to this new global community economy. And in this new economy, rather than me looking at you and saying, Scott, I have to take you down, it's the opposite. It's like, hey, how do we both lift each other up? We all rise together. It's a totally new horizon. And the truth is, the world is so bright. There's so much great stuff happening, Scott. And for people to be looking at everything that's wrong, it's just sad, because we are in an incredible time in history. We're going through this fourth turning. We're getting into the next phase. We're in the last throes of this. And the next many years, the next 80 to 100 years, is going to be an incredible super cycle of growth. And we're there. We get to experience it.
Right. So I'm saying over people. I know some people don't listen all the way through, but the reality is the peace of God that passes all understanding is going to guide your heart and mind. In Christ Jesus, we pray. Amen.
Thanks, Scott.
Thanks so much.